All right, let's dive in. Today, we're tackling something that's, well, absolutely essential for any finance professional in Nepal: IFRS and NFRS. And look, this isn't just about boring old rules. This is about understanding the actual language of modern business. Getting this right is a game changer. But first, just imagine for a second, what if every single company just made up its own rules for their finances? Seriously, think about it. How would you ever compare two different businesses? Who would you trust? It would be a complete and utter mess, right? So yeah, that chaotic scenario, that's exactly why we need to talk about this. Let's take a closer look at what that world without rules would actually mean for everyone involved: investors, banks, and yep, for you.
This is pretty much the nightmare scenario. Without a common playbook, fudging the numbers and manipulating profits becomes way too easy. You couldn't compare apples to apples. You wouldn't even know if you were looking at an apple or an orange. And when that happens, investor confidence just evaporates. The bottom line is, a lack of standards breeds a lack of trust, and our economies just can't run on that.
So how do you clean up a mess that big, a global mess? Well, the world needed a common financial language, a single standard that pretty much everyone could get behind. And that need gave rise to the global solution: IFRS. And here it is, IFRS. That stands for International Financial Reporting Standards. This is the big one. It's a single, globally accepted set of principles put out by the International Accounting Standards Board. You can really just think of it as the financial version of a universal language, like an Esperanto for accountants. And what's the whole point? Well, it's designed to fix the exact problems we just laid out. It's all about creating transparency so you can see what's really happening inside a company. It's about improving comparability so you can stack up companies against each other, even if they're in different countries. And at the end of the day, it's about rebuilding that confidence for the people who make the economy tick: investors and lenders. Okay, so that's the global picture. But how does all this translate to what we're doing right here in Nepal? Well, that brings us to our own local standard, which, as you're about to see, is very closely related to the global one. So let me introduce you to NFRS, Nepal Financial Reporting Standards. This is our national framework, and it comes from Nepal's own Accounting Standards Board. Now, the single most important thing to get here is that NFRS didn't just appear out of nowhere. It's not a totally separate system. It is very much based on IFRS. You know, I think this is the absolute best way to think about it. If IFRS is the global language of accounting that everyone speaks, then NFRS is simply the Nepali dialect. It's built on the same core grammar, the same vocabulary, but with a few local tweaks to make it work perfectly in our context. Okay, listen up. If you only remember one single thing from our chat today, please make it this next idea. This is the huge, fundamental shift in mindset that IFRS and NFRS are all about. We are moving away from a world of just following strict rules to a world guided by core principles. Just look at this comparison. The old way, the traditional approach, was all rule-based. It was like, if this specific thing happens, you must do that. It was all about the legal form, not necessarily what was actually going on with the money. The IFRS approach is totally different. It's principle-based. It forces you to ask, what is the economic substance here? What's the real story? And then report that truth with total transparency. It's really about using your brain, not just checking off boxes. Let's make this super practical. Take revenue. The old school view is pretty simple. You record the revenue when you get the cash. Makes sense, but it's not always the full story. The IFRS principle is way smarter. It says you recognize revenue when the control of the good or service is handed over to the customer. That's the moment the real economic event happens, whether you've been paid yet or not. Here's another perfect example: valuing an asset. The old way might mean you keep a big piece of machinery on your books at the price you paid for it 20 years ago, even if it's now a rusty piece of junk. The IFRS principle says, no way. You have to regularly test that asset for what's called impairment. If its value is tanked, your financial statements have to show that new, lower value. It's about reality. So what's the payoff for all this thinking? What does it all lead to? Well, the result is financial statements that are just more honest. They give a much more accurate picture of a company's true financial health and its economic reality. And that's a massive win for literally everyone. So we've covered the what and the why, but what does all of this actually mean for your career? Let's talk about the professional payoff, because it's significant. Look, this is so much more than just learning new rules to stay compliant. This is a straight-up career upgrade. Embracing this principle-based mindset moves you from being a bookkeeper to being a trusted advisor. You're no longer just entering data.
You're using your professional judgment to understand the why behind the numbers. That lets you create financial statements that investors and banks actually trust, which gives you massive credibility. And the best part? These skills aren't just for Nepal. They are globally recognized, opening up a world of opportunities.
So as we wrap this up, I want to leave you with a question to chew on. Think about your own job, your day-to-day tasks. Which part of it, maybe it's how you look at assets or revenue or leases, which part could benefit the most from this new way of thinking, from focusing on the real substance over the rigid form? The answer to that question could be the very next step in your career. Thanks for tuning in.